Okay, so now we're live. Hello, everyone. My name is Eddie Crazy, you know me, and this is the first live interview on our YouTube channel. Today, we'd like to start a series of videos where we will interview top blockchain experts, ask absolutely different questions, and hopefully really great answers on them. So we will start with our YouTube lives, but there is an idea to make interviews in a studio or at the home of our guests. So please tell us in the comments if you'd like to have detailed interviews on the most prominent, with the most prominent blockchain experts right from their homes, where they feel comfortable and can answer all questions we want. So we are waiting for your comment, guys. And today our first guest is Jamie Burke. Hey, Jamie.
Hi, guys.
Yeah, so all of the detailed background of Jamie you can easily find anywhere on Google or on his LinkedIn profile and somewhere else. But be sure that Jamie has a lot of achievements in the blockchain investment scheme. So Jamie, let's start straight to the point. And I guess the brightest thing that you have, and when you Google Jamie Burke on Google, the first line is you saying that 99% of all blockchain startups are bullshit. Could you please elaborate on that? Because you're an investor and you are one of the brightest investors in UK, right? Everyone knows you. So could you please elaborate on this thing that 99% of all blockchain startups are bullshit?
Yeah, so sadly I'm known as the bullshit guy, and I don't know if that was before I did that post or after it, but so that was kind of really born from the fact that myself and the Outlier Ventures partners have been investing in the blockchain space for about 4 years, and we've kind of seen the whole cycle, and within that time been trying to figure out how startups could build moats, defensible positions, sustainable business models. And really it was very hard, not just for us, but for a lot of the startups. You'd see them, the use cases made sense, but you couldn't see how they could build sustainable businesses beyond kind of this enterprise software consultancy model, which is fine, but it's not interesting to VCs. VCs are not interested in investing in consultancies. And that's typically because the best outcome is to be bought by a larger consultancy. So really, that's kind of the exit opportunity. So over that time, we spoke with over 1,200 blockchain startups from Toronto to Kenya to Tokyo. Actually, you can see them all. We listed them in an open database, categorized them by country and sector. And I think you can find that on Blockchain Angels, but it might be on the Outlier Ventures website as well. And so we spoke to an awful lot. And, when you speak to that many startups, you kind of start to spot patterns and see signals. And through most of those, when we were seeing people executing at the infrastructure level, we couldn't help but think this stuff really, if you're going to do it, it should really be open source. And yes, you could charge for aspects of it, but not for very long. Really, it was kind of a downward pressure to zero, because if it's open source, somebody can just copy it and do it cheaper. So, your price point's always going to be eroded to the point whereby actually the only model that makes sense is if it's community owned and the incentive is kind of the underlying token. So a lot of people missed that kind of hint in the beginning part of the bullshit post, which very clearly states at the beginning, most of this stuff should be free and open source, right? There is no kind of proprietary business model in it. And then, similarly, as you kind of move up the stack and you look at the application layer, well, the whole point of smart contracts, firstly, not many business models using smart contracts are viable at the moment because of lots of kind of complications around gas price and all this kind of stuff with Ethereum at the moment. But again, the principle stands. The whole point of a smart contract is that you can interrogate it. And so again, there's this pressure that if your price point, you're charging for somebody to use your smart contract, somebody could come along and in theory do it cheaper. So it forces you to kind of, it's a race to zero really. And so we were looking at the infrastructure, we were looking at the application layer, and we really just couldn't see how anybody could make a sustainable business in it, you know, beyond doing a token issuance. And at the time of that blog post, actually the whole ICO market hadn't kicked off to where it is today. And so that kind of felt like more of a long-term goal. And so really, I mean, the title is obviously clickbait, right? It's meant to be provocative. But if you said 90% of startups are bullshit, so 90% of startups fail, I think, you know, at that point you could easily say, well, an additional 9% of blockchain startups would fail, unless their model was to be an enterprise consultancy and to be acquired as such. So it was kind of really a flag in the sand, and it was interesting in large part. It was received really well, even by a lot of startups who probably fell into the bullshit, the 99% category, because they couldn't figure out, you know, how they were going to make money from this stuff. So I think the whole ICO thing's accelerated the open sourcing of stuff, and I think that makes total sense when we're thinking of the infrastructure. But one of the other kind of things that came out of that thesis was where you could potentially build proprietary business models, was when you started to think of the blockchain aspect as really just part of the stack, not the business model in and of itself. And when you were to think of these ledgers, really the DLT as a way to unlock silos of data, standardize them at the point of transaction. And really that's kind of gold dust for AI companies. AI companies are desperately looking to acquire data. Generally, a startup in AI is at a disadvantage because it doesn't have data compared to, you know, the big AI players. So much so that Tesla even feels the need to, you know, create the Open AI initiative just to be able to compete with the likes of Google. Even Tesla doesn't think it can compete. And so the idea was, you know, if you could make your smart contract genuinely smart and potentially smarter than everybody else's, then in theory you could charge a premium. And the interesting thing about AI is that, you know, once you have a head start, assuming all things equal, assuming that you're using the same algorithms, which haven't really changed much since the 60s and 70s, you're assuming that everybody's got the same access to the same data on the DLT. Just by having, you know, a slightly better team and more time training the AI, you can steal an advantage, which is very difficult for somebody to catch up because the learning of the AI compounds. And so the kind of thing that came out of it was either you need to open source and your model is the tokenization of the system, or it's you need to start thinking of yourself as an AI company that leverages blockchain infrastructure to aggregate data.
I see. Yeah, I see that you've answered that question many times. You already have like a prepared, well-structured answer. But you've mentioned these ICOs, right? And said that it's a totally different thing, and that ICOs kicked off. So don't you believe that like almost the same, more than 90% of all of these projects raising millions of dollars now, they will also fail? And what will happen with the market when all of these millions of dollars they will like go nowhere? What do you think about that?
Yeah, so definitely 99% of tokens are bullshit, right? And that's, I think that's obvious to almost anybody. And largely, so I think what's important is, and it took, in all honesty, it took me a while to get here. You know, we only made our first token investment a couple of months back into IOTA. We actually wrote our first article on pros and cons of ICOs middle of last year, and it took us up until now to really get comfortable with the paradigm and why we're investing into this space. So I think it's important to not judge the potential of token issuances and that model by where ICOs are today, because where ICOs are today generally is, you know, people are looking to navigate around securities laws in order to raise money from retail investors who are largely, people that have made significant returns on Bitcoin or Ether. They're now looking for the next 1000x. They're not going to get that in Bitcoin or Ether. And so they're recycling their money. And in large part, it's because they don't want to bring their gains off chain, because then they have to pay capital gains tax, right? So they keep it in the system and they keep recycling it. And so, to be honest with you, they don't really care about the longevity and the sustainability of anything they're investing in generally. They're doing it purely for speculative purposes and to kind of get that quick multiple. So, that's just part of the market. Now, what's interesting when you think about the longevity of all of this stuff. So if you think about the old VC model, where 90% of startups fail, what usually happens when those startups fail is all value is lost forever, right? So all of the capital, and it's like billions, it's tens of billions globally that's invested in VC money. 90% of that money is totally wasted because the startup dies, usually within its first 3 years. All the IP is lost. It doesn't get to sell it. And all the know-how's lost as the team dissipates. And so that's a really inefficient allocation of capital. It's a really inefficient way to finance innovation. The really interesting thing with tokens is they're inherently more, I kind of say they're more anti-fragile. So, the old VC model is very fragile. It's very broken. And, once the startup fails, all value's lost. With a token model, really, you're backing a community, and it's an open source community. And in theory, and this isn't always in practice, so when you're investing in a token issuance, you really need to look at where the IP is housed. Is it in a commercial entity? Is it all in a foundation? But in principle, how they should be done is all the IP is open sourced, and the value of that is locked into the token or the protocol. And so for example, if you look at the valuations of some of these, the market caps of some of these protocols, it's in the billions. And if you think of it as a startup, it's insane. There's just no way that as a startup is worth billions. But it's not a startup. Actually, what it is an economy. It's a community. It's an open source community. And whilst you're backing this initial founding team to kind of be the genesis of the community, in theory, if they fail, and you've got to expect that most will fail, just like most fail in the startup world, the only difference is that all value, in theory, is retained because it's open source. And one team might fail, the community might lose faith in their level of execution or whatever it may be, the community can fork. And that could happen innumerable times. And as a token holder, in theory, your value is retained, your shareholding is retained. And so actually it's incredibly less risky. It's incredibly less fragile and potentially much more sustainable, because we're talking about, in theory, the recycling of value pivots. It's much more evolutionary rather than this kind of stop and start process of the VC space. So for me, that's where this will all go once the ICO space professionalizes and just does some really basic things like vesting. So rather than give the founders all the money up front, it vests based upon them delivering. And by the way, that could be not just for them. It could be whoever delivers. The foundation retains the tokens. That could be DAO-like with smart contracts, or it could just be governed by people, VCs, professional investors, foundation members who then make a call on whether they think value's been delivered and then release the token. So that's really, really simple to implement. There's lots of very simple, well-established governance structures that will dramatically reduce failure rate. But again, I come back to the broader point, which is, even if you assume that 90% of these individual founding teams failed, that does not mean that 90% of the protocols will fail. In theory, none of them should fail. That is on the assumption that there is genuine value in the protocol and there is genuine value in the utility function of the token. And I think, again, sadly, at the moment, most of these tokens have no utility value. They are basically crypto equity. That's all they are. They're a speculative tool.
very interesting and mind refreshing, because really almost all of these projects doing ICOs now, they're not just startups, but they are whole economies and products, right? So it's a wholly different thing. Yep. Yeah. Well, yeah. When I was reading one of your articles, I noted one thing that you wrote. It's like you said, some VCs might not always care about long-term sustainability if they feel they can get a quick exit. So do you think that it's like the main thing that drives ICOs now, this quick exit, right, like in a week from after the ICO? And of course, the low investment amounts that you can invest. What do you think?
Yeah, so there's a couple of aspects to it. So I always kind of refer to, if people say, well, what is the killer app of blockchain or Ethereum? And I think very clearly at the moment it's ICOs, right? It's the ability to tokenize, fractionalize, and financialize, and if you do it badly, securitize. So I like to say financialize value. And so, you know, what that means is that the fractionalized bit's really important, because it means that it becomes, this asset class becomes infinitely more easy for anybody to participate in pennies. You know, you could participate in 50 pence. It doesn't have to be $100,000. So I wouldn't say it democratizes the landscape, because I think you still see the same wealth concentration. The people with more wealth are going to make more wealth, right? I don't think it's going to better distribute that wealth. It's just going to make some new millionaires in the process. But you know, this fractionalization means that there's, in theory, the barrier to entry is lower. And it's interesting, if you look at we did some analysis, the top 10 FTSE companies based on daily trading volume is 5 times lower than the daily trading of the top 10 cryptos. So it's huge liquidity, 24 hours a day, 7 days a week. So, you know, that kind of, this liquidity piece is really interesting to most investors who have their capital locked up and require liquidity events to be able to do new rounds of investing, right? To exit their positions. So yes, but that's only one side of the market, right? And I make the argument, you've got polychain capitals of this world, they're basically hedge funds, right? They're day traders. And I think you're going to see a lot of investors who are day traders. You know, they are, and because it's not a security, technically, they have inside knowledge. They're kind of all the perks of insider trading without it being insider trading, right? So they can exit positions, they can move markets, and I think you're going to get a lot of malpractice in that space. But put that aside. On the other side of the market, you've got the startups, and you know, startups similarly there are inherent problems with the current equity model. And that's largely that their own wealth is locked up, for example, from a liquidity perspective. And every time they need money, they suffer dilution, which means they lose control of the business. And so we're talking to a number of our portfolio companies that have been equity investments that require network effect. And this is one of the most powerful things about the whole token phenomena is it's network effect on steroids, because all of a sudden, users have a direct and real financial incentive to advocate and be loyal. You know, when you kind of look at these startups, traditionally as an equity company, their first 3 years, if they survive at all, is often predicated by their ability to generate revenue or to convince investors to continue to give them money. And that's usually predicated on them showing signs of market traction. And that's usually getting a customer to pay for a product. So the problem is they end up in short-term cycles of building products for the customer that will pay them quickest. And often that's just whichever customer they can find. So a really interesting way that some of the startups that we're talking to who are now going to be performing a token issuance, but that are an existing startup with customers and product and existing investors, some of which are us, they say it allows them to telescope to their future vision. So most of these startups, when they start out, will have a 5-year vision, you know, their big vision of where they want to get to. But then the practicalities of getting there require them to just build the product that somebody will pay them to build. not necessarily, and that's so the path to the big vision kind of goes like that, and sometimes they never get there. What happens when they can do the token issuance is they can raise enough capital that they can telescope that big vision to year one. So it's no longer year 5, it's year 1. They can raise enough capital to just focus purely on executing on the product roadmap to get to that big vision, and not necessarily worry about having to find a customer to pay them. Of course, and again, this is where it comes to structuring these things in the right way. If they have the right professional investor on board, we would insist that there is vesting. Ours would also invest alongside it. And that vesting would be against market traction. So they would still need to be showing that the market needs what they're building, but it's not predicated upon who will pay them the most or quickest. So you add these two things together, you've got an incentive for investors to have liquidity and secondary markets to trade this stuff. You've got the ability for the startup to keep control of their company, not dilute, raise large amounts of capital quickly, telescope forward to their big vision. The two of those things are, I'd say, almost like harrowing. I can't see how the market is going to be able to get off that. And so it's no surprise that for the first time ever this quarter, money raised by token sales has surpassed VC money into blockchain. That's never going to change. It's only going to increase this gap. And it's spreading into other areas. So IOTA, was the first example of kind of IoT, another deep tech space. I know many AI companies, 2 of which will be participating in, are looking at this because they need network effect as well. And I think just last week, the Bancor ICO was talked about in Mashable. And for me, Mashable's mainstream startup media. So all of a sudden, you're going to see a plethora of equity-based startups who are going to be wanting to ICO. And it's interesting, sometimes their VCs will be pushing them to do it. So I know that the Kick ICO was suggested for them to do that by Union Square Ventures, who'd already invested in them from an equity perspective and said, hey, why don't you ICO? Now, I'm not saying this is the case with them, but one of the downsides with that is I think for a lot of unscrupulous VCs who have large parts of their portfolio that are kind of zombies, right? They're startups, they're not dead, but they're not growing. I think there'll be a lot of temptation for these guys to just go, well, look, let's ICO all the crap in our portfolio so we can liquidate the asset and then use it somewhere else. So I think the next year is going to be, if people think we're in a bubble, you haven't seen anything yet. The next 18 months, you're going to see a huge amount of originally non-blockchain startups ICOing, largely for the wrong reasons. But again, if this is all open source stuff, I'm kind of not so upset by that, because I just think if we have more open source technology for the world to build on, that can only be a good thing.
Thanks. And I think that the fact that non-blockchain companies are coming to the ICOs and they're doing ICOs is a great sign. It's really cool. And then, continuing the subject of ICOs, you said that most of the investors in the ICOs, they have made like 100x profits on Ether and Bitcoin, right? And now are investing in it. May I ask you a question if actually you make really big profits on that? Are you a Bitcoin millionaire?
No, I wish. Yeah, sadly, I didn't have it that easy. So the holdings that I had in both Bitcoin and Ether, largely over the last few years, I've had to draw down on in order to invest in the equity startups that we did over the last 4 years. So the Outlier is a partnership of 15 partners now. It's been financed by our collective private wealth. So most of the guys in there are ex-bankers. Some of them, retired fairly young. So we've used all of our own capital, and that's given us huge advantages. So, with the whole, the ICO phenomena and really is kind of making a bit of a pivot now to focus almost squarely on startups that kind of will be doing token issuances. We were able to do that because it was our money, so we didn't have LPs that we needed to justify. And I think you look at a lot of other VCs there, all the big VCs, apart from Union Square Ventures, Andreessen, Pantera, largely, so a few exceptions, either that were already making blockchain investments or where the kind of the principals have such a reputation that they can do what they want, like Draper. The majority of VCs that are pretty much just money managers on behalf of pension funds, they have their term sheets that they're locked into for the next 3-4 years. They cannot participate in this first cycle of Web3. So it's a huge opportunity for people like us. But sadly, one of the downsides was that, I had to kind of liquidate most of my crypto holdings. So no, sadly, I am not a Bitcoin millionaire. But we do have significant holdings in things like IOTAs.
Got it. I'm not a Bitcoin millionaire, so we're in the same club.
If anyone is, please send me some money.
Okay, so you just said that actually you're invested in IOTA, but what I found in one of your articles, you said that at Outlier Ventures we never have or ever will invest in blockchain infrastructure, and now you say that you're invested in IOTA. What changed your mind? And could you tell us, please, if that's like public information, how much you have invested in IOTA?
Sure. So you're right to pull me up on that, and I really said that from the framing of I would never invest in an equity investment into somebody that's building proprietary infrastructure. So, for example, a kind of well, actually, I don't want to give an example because I don't think that's fair. But there are plenty of startups that are building proprietary BaaS type solutions for, say, the banking sector, the insurance sector. They were never interesting to us for all the reasons that I just mentioned. And kind of going back to the first few paragraphs in the bullshit post, it was because I believed all that should be open source and driven by tokens. At that point, I didn't see any that were interesting enough to participate in from a token perspective, beyond Ethereum, really. And even then, I still have major concerns with its fundamental design, which is why IOTA was very interesting, because it fundamentally addressed the tension in that economy of miners and their tendency to want to keep transaction fees high and what have you. So basically, so that was that rationale. IOTA was the first one that came along where we said, well, what they're doing is really innovative, genuinely innovative. We knew that it solved a real and quantifiable problem, which was mainly to secure industrial IoT and enable the machine-to-machine economy to function. And we, because we've been championing this whole convergence thesis for a while, combinations of IoT and blockchain, AI and blockchain, especially in an industrial setting. So if you go to convergence.vc, we've been building a community over the last year around the world, from Singapore to Hong Kong to Berlin, Boston, with incumbents who were looking at how can they use combinations of these technologies with blockchain-like technologies foundational to be applied to real business problems. And a really big one that was coming through in Industry 4.0 with a lot of German manufacturers, from Airbus to Siemens to BMW, whomever, was this real and immediate need to find a solution to solve blockchain and how to solve the IoT problem in an industrial setting, and how Ethereum couldn't do that. Fundamentally, they didn't believe it could do that. So we already had a large corporate client base and partner base to co-invest with, who had heard of IOTA, we had a shared kind of network, and we had a big belief in the team. And so it's kind of those combinations of things where we thought, this is something we can really add value to. And again, the big difference for us, and this will be replicated across all of our future investments, is these are protocols that we directly can participate in helping shape. So with IOTA, they actually approached us at Outlier to say, look, we'd really like to bring you on board to help develop the corporate partnerships, and to also kind of give some authority and kind of reputation to what we're doing, because we really want to distance ourselves from the rest of the kind of crazy ICO market. And so it's interesting, you think about what is a VC. To be honest with you, IOTA didn't really need our money. They'd actually already distributed most of the tokens a year before they did their listing. So they didn't come to us necessarily for capital. Of course, they wanted us to invest in a meaningful way, and we wanted to have the upside. But the primary driver was actually they wanted Outlier to be on the foundation. They wanted to be able to tell the world that Outlier was comfortable with the governance structure, that was going to assist the guys in kind of the corporate partnerships piece. So that was kind of what we did. And all I can say is that we don't talk about the exact numbers, but we have multiple millions in holdings. And we've taken that very much as a long position. So, we are not kind of out there day trading, or shorting in the market. Our view is we think that that the IOTA community have a long way to go. Obviously, we have the benefit of knowing what's going on and facilitating some of those kind of corporate engagements in a way that we can kind of see very quickly. For me, it's obvious that IOTA should at least be where Ethereum is today in terms of its market cap in the next few years, because it's got such a vibrant community, it's getting such corporate traction, and because its technology fundamentally addresses some key challenges in the economic design. And I think, to come back to a point that you made earlier around about, what are the skills required now to kind of be entering into this space and to be doing token issuances? Well, it really does require the ability to kind of think these things through as economies. And so we've got a partnership, a 3-year partnership with Imperial College, initially with their blockchain lab. But it's now also extended to their economics department. So we're working with their professors there to apply economic theory to token design for some of the token issuances that we'll be involved with, to the point whereby we will actually run simulations in the lab on how these economies function at scale, possibly even leveraging some supercomputers from some other universities, in a way that we can kind of stress test the economic theory and behavioral economics of how we're kind of designing incentives and systems. So, I think there's going to be a huge leap in how well these things are designed based upon the knowledge we learn from the flaws and failings of things like the Bitcoin blockchain and Ethereum. And hopefully we kind of get to be at the forefront of all that.
Thanks so much, detailed answer. And I see that it's really like very, very fundamental, serious approach, right, with these tokens of the things. Great. And yeah, you mentioned Ethereum many times, and we are very short on time. But anyway, I would like to ask that question. So, Ethereum has now really big problems with the scaling problem, right? The problem that a lot of ICOs are happening on them. And so what do you think, what problems should Ethereum solve, like to take off again, to become mainstream, right? Yeah. So how do you see them solving these problems and what they actually should do, like shortly?
Yeah. So, I mean, you could go into kind of many deep technical arguments about what they should and shouldn't do, but I won't do that, and I'm probably not the best person to do it. So I keep it at a high level. But I think Ethereum, the Ethereum Foundation anyway, need to decide what they want Ethereum to be. Now, one of the challenges I think that they've got is, if you're an Ether holder, you've done pretty well despite all of its flaws in terms of its utility beyond ICOs, you've done pretty well out of your tokens, right? Okay. And you're doing pretty well out of it being the place where ICOs are done with the RC20 thing. So why would you want it to be anything other than that? Certainly the miners don't necessarily want it to be anything other than that. So I think it's going to be very hard for them to navigate out of that position, because so many people have done so well out of it. And perhaps, its kind of direction is, I wouldn't say hijacked, I think that's a bit too harsh, but it has commercial pressures it didn't previously have, which limit its utility function, or the breadth of its utility function. I think just like Bitcoin, I think most people have come to terms with what Bitcoin is today, right, and what it isn't. And I think you can see that by the level of liquidity in the whole ICO space, because a lot of this is people who've made money from Bitcoin who a year ago would have denied that there could ever be anything else than one blockchain. And now they're spread betting on, 50, 60. So I think, people come to terms with the limitations of a platform and say, but actually it does certain things very well. We live in a multi-chain universe. Let's keep this thing doing what it does well, maybe with some kind of design changes in its economic design to do it more efficiently and more effectively. And let's look at designing new solutions bottom up that might be derivatives of these things, where we're thinking through the economic design relative to the health industry, or use cases in the health industry, or relative to knowledge markets in AI, and how we can kind of pass and share data to train AI. So these have very different requirements, very different design requirements, that I think you have to build bottom up. I think it's going to be very difficult to reverse engineer existing solutions just from a technical perspective, and then that aside, especially when you have whole stakeholder groups that are quite happy with the limitations of Ethereum as it is today.
Thank you. And Jamie, so taking into account everything that we've discussed today, I mean, these ICOs and VC markets, right? So could you tell us from your perspective, how do you see the investment market in future, let's say 5, 10 years maybe, how that will be reinvented, how that will change because of all of the current stuff happening? So how do you see the investment market, and when do you think will be the fundamental change?
I wish I had the answer to that. It's kind of a live thought process, so I can only just, tell you what's in my head currently, and it's pretty informed. But one of the things I was tweeting about this weekend was the idea of an aggregate ICO. So, I spent the last week at a number of events. I was in Brussels at a EU Commission policy workshop on blockchain on, I think, Monday. And then Friday, I was at a crypto finance event, which I guess was our equivalent of the ICO summit here in London, which was, crazy. And across both of those, everybody's doing an ICO. I mean, everybody.
Yes.
Some don't even know why they're doing it. Some have a pretty developed idea of why they're doing it. And increasingly, there's going to be a lot of duplication, which makes no sense if you're doing open source projects, right? Just makes totally no sense for multiple open source projects to be building the same infrastructure. So one of the kind of ideas that I'm championing at the moment is the idea of an aggregate ICO. So for example, one of our investments, an equity-based investment, has been, it's got some ex-DeepMind guys who prior to that had a background in gaming and creating simulated environments with, you know, these agents that would kind of interact with each other in simulated environments. And they were beginning to deploy that in combination with blockchain to control fleets of drones, autonomous fleets of drones in this kind of decentralized marketplace. But the kind of AI technology that they were building is quite easily applicable to other forms of autonomous economic agents. That could be cars, trucks, planes, you name it, shipping containers. And so what I started to do is, you know, just last week, somebody involved in the ports in the Netherlands, or I think it's Eindhoven, are looking at autonomous shipping. I was talking to somebody in Germany who's doing kind of APIs for data exchanges between autonomous vehicles, and they're all wanting to do their own ICOs. And so what I'm now doing is I'm saying, look, we're going to aggregate all this up, the relevant standout startups that have real product, ideally real customers, and we're going to aggregate all this up into an open mobility ICO. So rather than do, you know, 20 ICOs in kind of sub strands of mobility, let's just say we're going to do one mother of all open mobility ICO that's going to raise, whereby all these startups kind of commit their respective code and IP. So it could be they commit code, it could be they commit user base, and we kind of aggregate all that value into one token, one protocol. And so for me, I think that's going to be the big trend. We're going to do 3 of these aggregate ICOs this year, so they're going to be big. And they're going to involve combinations of existing startups with real products. We might even have some corporates participating, so we'll have some of the first corporate-backed ICOs. So that's kind of where I see it all going. And to kind of do that, it's almost like the ICO becomes a thematic fund in itself, because it's bigger than just one startup. We're gonna collect a very large amount of capital, and then we're going to deploy that. We're even looking at things like acquisitions. So, you know, when we map this open mobility ecosystem, who we're going to partner with, who are we going to aggregate into it, who are we going to disrupt, and who are we going to acquire? You know, so there might be, for example, if there's an AI component, there might be a player out there that's got lots of data around open mobility. Just acquire them, raise the money, acquire them. So I think from our side, I think they should be, people are doing ICOs, they should be thinking in really big, ambitious ways. They should be thinking about partnering, not competing. Yeah, so that's kind of my big vision.
Yeah, great. So this aggregating all ICOs is an interesting idea. I didn't think about that. Yeah, really cool. It's like one token based on all other tokens, right? Something like that.
And you can, so the idea is you can aggregate up, and then if over time, for whatever reason, one of those teams feels that there's a nuance that they want to explore separately, they can fork, right? So you aggregate up, get all the base stuff out of the way, the base protocol, and then everyone's obviously free. It's a fluid market, free to then fork into a derivative of. So, you know, that's kind of how I'm thinking about it at the moment, with these quite fluid systems.
Yeah, interesting thing. I will also think about that in the meantime. Yeah. Okay. So Jamie, the last question. It's a pretty interesting question. If you see Satoshi Nakamoto, what will you tell him?
Wow. Well, look, I mean, I think you can't underestimate. This is on a par with Tim Berners-Lee, right? You know, this kind of gift to the universe, and that's. I don't think it's one person, by the way. I think it's a group of people. So I don't, in their wildest dreams, could they have imagined that this really has the level of traction that it's had, that it's basically informed and created Web3, the next phase of the web. So, you know, I mean, you just beg for that meeting, right? To be able to get pissed, have some wine or beer, and sit through and try and understand where they thought this was going to go and how different it looks, right?
Okay. Yeah. So thanks so much, Jamie, for today's interview. It was a bit longer than we expected, but anyway, it was very, very interesting. Thanks for all your answers. So guys, thanks so much for the view. Jamie actually was one of the speakers at our previous event at BlockShow Europe 2017 in Munich. All knows that we are preparing our new BlockShow in Asia this November in Singapore. So please join us. Maybe even Jamie will be one of our speakers as well. We will speak about this with him a bit further. So thanks so much, everyone. Join our contest as well, where you can win $2,000 and 5 tickets to the BlockShow conference. You will find all of the descriptions and conditions under this video. So thanks so much, everyone. That was Jamie Burke. My name is Eddie Krizi. See ya and bye-bye.
Bye.